Good morning, traders. We are Wednesday, 26th of February, and we are ready for another flow show. Thanks, everybody, for joining me today. Ryan is off for a day, so he will be back tomorrow. So I'll be your host for this session. Let's straight away kick off with what's been said and commented upon yesterday and overnight. And we start with for a change in the UK because that was the earliest comments that we had. Starmer was on the wires yesterday, and he was talking about this new defense budget. Not anything surprising in there. They are planning to raise the defense budget, and in the meantime, also cutting some of the aid projects to cover for it. So not a lot of surprises there. He did say that they won't lift the taxes or the borrowing to fund it. Now, I don't know how you can fund something without ra raising anything, but also we have seen that the reserves that they could use, the extra that they have, was a little bit less than expected. So I'm still a bit doubtful that promises will be kept on that side. There was a bit of a reaction as well by the UK Retailers Union overnight, saying that if there would be a tax hike, the contributions hike upcoming, the UK retail market could lose up to 160,000 part-time jobs over the next 3 years. So that's a bit of a warning shot towards Reeves as well. Her budget is not due before the end of next month. But as we know, there's a lot going on about what can possibly happen in the UK right now. So I wouldn't completely dismiss all those chatters that there are coming right now, well ahead of the budget, because there could be a bit of stress coming there. Also, what on the tariff front, then Scheinbaum, Mexico's Scheinbaum, said that they are working on, but still have no date confirmed on a call with Trump. She expects them to close a trade deal with the US before next Tuesday. But as we all know, Trump should be deciding upon tariffs over the weekend, so she may be a little bit late with her personal deadline. For that, we will need to see what Trump does. And in the meantime, the Mexican peso has been still offered on the defensive, but the main one that has been sold yesterday, and that is due to incessant pressure from virtually all US officials now, is Canada and the Canadian dollar, which saw a pretty decent leg lower yesterday. And that somewhere kicked off. We broke through that 142.70 level on the dollar Canada when Navarro came up on the scene. He's one of the White House trade advisors, and saying that the tariff negotiations with Mexico and Canada are still ongoing. They need to stop fentanyl. And if there is no progress on that side, tariffs will be put into place. And then there was this kind of an addition with coming from the White House, and officials saying that they are thinking about taking Canada out of the Five Eyes military um, coalition, shall I say, that they have with other countries under which UK, Australia, but also and especially in this case Canada is part of. And when those comments started to hit, also helped by a break lower, I guess in oil, all of a sudden dollar Canada started to take off, break that level, and we are now in a gradual move here higher on the dollar Canada. We'll have a look at that on the charts a little later. But the situation in Canada, we were thinking that the Canada situation was going to be more easily solved than the Mexican, but now the Canadian dollar has caught up with the Mexican peso and is under the cush. Furthermore, Besant was on the wires yesterday, and he was talking at the Australian embassy, and he was cautioning a little bit, putting a bit of caution under the on the U.S. economy, saying that it's brittle due to the Biden spending policies and the job growth in recent years has been concentrated in government and adjacent bodies, and that the private sector has been in recession due to the Biden policies as well. And he says the aim of the government right now is to re-privatize the economy. And when they will be able to do so, he thinks that the confidence in also the fiscal programs that the US government is putting in place will see the term premium on bonds contract. So he was talking about that economic side. And then he said something about Australia. He also said that they have confidence, and Australia is one of the preferred partners for now. So the Aussie dollar got a little bit of a lift there, but then the market quickly turned that around, or at least lost confidence, because we know since he was talking at the Australian embassy, it could have been just some gentle talk there, but we also know that U.S. policies right now are very much looking inside as opposed to looking outside and being very nice to the partners. So that support that the Aussie dollar got lasted for a few hours, but we see now that this support is coming going away a little bit. Um, We also had comments out from Iran, to stay on the geopolitical side, saying that they will not talk to the US on nuclear issues, but they will talk with China and Russia. And there was a bit of a line this morning saying that they were even talking to Europe. So Iran wants to rather turn its back to the US and talk with other countries, other blocs when talking about the nuclear issues. What's next? We had a few We had a few ECB commenters as well yesterday. We had ECB Stornara saying that it's too early to discuss the pausing in rate cuts, and they are still in restrictive territories, where Schnabel, Germany Schnabel, rather said that she wants to be cautious on the further rate cuts, that we may not be far from leaving restrictive territory. That's a bit in opposition to her colleague Nagel, the other German member, and he sees more cuts because he thinks the inflation is now under control. So that's a bit interesting. We were talking about this divergence again creeping up between the hawks and the doves. That's going to give food for discussions over the next ECB meeting, obviously. And then we move over to what's been signed. The expectations were for Ukraine to sign a deal on minerals. It's a softened version of what Trump originally proposed. Now they rather go into a joint venture, a 50-50 kind of venture regarding those minerals, gas, and what else not. Um, it is some sort of a positive, but it's not signed yet. Zelensky is expected to go to Washington on Friday to sign this deal, but there are very few details in the deal about what's going to happen to protection, because we know that the Ukrainians wanted to um, have a deal, a global deal, which would comprise those minerals with the US, but also a deal on protection, and that those details were not very clear. So I suppose we will hear more about those in the next upcoming days. Staying in Ukraine, we know that France and the UK had proposed to send some peacekeeping forces into Ukraine for when a peace deal would be signed. Well, we just had the Russians comment on that. Lavrov was coming out saying on the possibility of EU troops deployment in Ukraine after the conflict, we don't consider any such options. French and British idea of sending peacekeeper into Ukraine is aimed at further fueling the conflict. Discussions of peacekeepers in Ukraine is empty talk, and this would mean drawing Ukraine into NATO and totally destroying the rights of Russian speakers. So um, we're not at the end of the story. As much is clear. We are really not at the end of the story. The situation is still fluid, in my opinion. We still need to wait what's going to come out of it. We do have the impression that somewhere these direct negotiations between the US and Russia may lead to something, but is it not also watering down the strength of the negotiation side, especially by the US, and leaving Europe out of the frame is not really a big positive either. So I still think we need to wait for every piece of the puzzle to fall into place and then form a real idea about what is going to happen with the Ukrainian situation. What else is happening? Okay, there's lots of talks about this Trump-Mar-a-Lago deal and where they are going to try to weaken the dollar, put rates lower, have this fiscality in place and stuff. I mean, there's a lot of market talk, but before it really happens, it is not out of the question. I'm not saying this is not going to happen, and it's been talked about from well before even Trump got elected, that that was the plan for the big 2025 plan. Um, Yesterday I was speaking on Face as well that I think there may be a bit of an inflection point coming. Is it part of the market tradings right now, thinking that this deal could come to fruition? There is probably a part of it hanging around in the market, but I think if the dollar turns around, it may be for different reasons as well. So I'm I'm not sure that this is going to be flying this deal, because there's going to be a big fight back from external economies, of course, if the US starts to really manipulate the dollar lower, which is entirely possible, of course, but that would be quite visible if you see how much they hammer other countries when they think that there is something going on with the currencies, even if it's not, like in places like Germany or so. So that is something that is now hot in the markets as well. So just don't forget about that. What else? Um, okay, last thing on the central bank side then is that we had Fed's Barkin talking yesterday, saying that it's still appropriate to remain a modestly restrictive stance. So on the Fed side, it is still clear that everybody is just in a wait and see moment right now. So there's really no change there, and I think everybody is waiting now to see what's going to happen on the geopolitical front, on the war front, on the tariff front, to make decisions for any upcoming meeting. So I think every central bank now is just watching to see what is going to happen on that front. What's going to happen today? We have the start of the G20 meetings in South Africa. We already know that the US is not going to sign any joint statement which would call Russia out as being the aggressors. So that is probably going to be a no-go. The thing is, they probably just will talk about what's going on in Ukraine, what's going on with China, what's going on with Russia, etc., etc., and what's going on the tariff side. but I don't see any real solutions coming out of this particular G20 meetings. Besen is actually not going there. I don't think that even the Japanese finance minister is going to be there either, because he has some local stuff to deal with, like the budget, etc. So it's likely going to be a bit of a watered down G20 summit this time. Moving over to what we had on the data front yesterday, and a bit of the housing market. Those are still December numbers, so I would quickly move on from those. Then we had this one here, the conference board consumer confidence, and that was a bit of an ugly one. It came out well below 100, and the sentiment is really weakening on the consumer side, and this is interesting because it's a February number, okay? And then I'm quickly going to take back what we've put regarding that in our chat room yesterday. There we go. I'm just going to quickly go back over the report, and it's really the future expectations of the consumer is now not really good. And in line with what we saw on those Michigan numbers, inflation expectations have jumped quite a bit in there as well. The job market is also expected to slow down a bit. And actually, really, the report was not a great one. The average 12-month inflation expectations jumped from 5.2 to 6%. Only to mention that I mean, the consumer is really showing signs of weakness. That in turn will raise the antennas of the Fed. Okay, they're probably not going to move anytime soon. It's probably too early. But when the consumer starts to slow down, as I've already said many times, that's where the Fed comes in and says, like, hang on a bit, this is not going the right way. So this is going to be something that the Fed is going to watch very closely. Okay, so that for those data. We had lukewarm. It was not too bad, the Richmond Manufacturing Index, but it's not your main data point either. Then we had the 5-year auction, which was pretty good, as expected, I would say, because the bond market is going up. The yields are coming down a bit across the board, but especially in the US, we've seen those yields coming down quite a bit of late. Um, and so there is no surprise that the auctions are going pretty well right now. Moving over to Australia, we had this CPI data. Uh, a tick below, just like a 10 BP below the expected, similar to last month. So there's not too much of news to get from there. Slightly weaker construction report there, but that is still, again, that is a fourth quarter report. So we should not really look at that too closely, I would say. What's been happening for the rest of the day? The Japanese data did not move the needle too much, although the core CPI moved up to 2.2%, and that is the Bank of Japan one, but it's not the core of the core. Okay, so this moves back above 2%. It is still going up and staying up in Japan, so that is keeping the yen underpinned on any dip. Yesterday we actually had a drop below a significant level, but now we are coming back there. I'll have a look at that obviously a little bit later. And for the rest, been pretty quiet. The Germans, well, the Germans consumer climate, as we know, is still not doing too well, but the market is ignoring everything on that side right now, as we see in the prices. Bit of secondary stuff for the rest. What's coming up today? Not a lot. A bit more um, building and housing data coming up. Barkin speaking again. And the oil report. Yeah, what did the API do last night? Okay, bit of a draw where we had a build expected. So over the past weeks, the EIA report did reflect again roughly what the API showed. We had weeks where it was divergent, but we are back to showing similar numbers, so something to keep an eye on. And we have a 7-year note auction as well upcoming tonight. All else equal, I would say this should still be doing relatively okay. I think it's tomorrow. Yeah, tomorrow morning we are getting CPI data, February CPI data, the start of the February CPI data in Europe. Okay, um, let's move on to what's happening on the prices side of things. First thing that I need to precise is today we are trading value date end of month, so month end is kicking off for good. Um, mild yen buying, perhaps mild or very light dollar buying, but we have seen these equity markets being so volatile that it may all just go by and not see too much. But I would suspect that the yen buying may be prominent and perhaps is already what the market has been trading. But we are trading value date end of month. We will see this afternoon if the US corporates have a bit of dollar shopping to do. That may see, as I said, a bit of dollar buying, but it all remains to be seen. The last few months, it has been quite random, so I'm not going to bank on it too much. But if they would come around, I may use it as an opportunity to perhaps sell a few dollars. Maybe even in the euro for once. I'm still not a big euro fan, but the euro is showing signs of starting to keep levels, and I'm really thinking about this 104.5, for instance. In the meantime, we are still trading this range 104.50, 105.30s. As long as we don't break outside of them, the range is what we should be monitoring. And obviously, if ever this week, next week or so, we would break above this level, then we will have a closer look at what's happening at 106, where really the 106 figure 15 is where the euro dollar should cap, or a break above would see a much deeper move unfold. I think a much bigger move to the top side unfold. But before that happens, and in the intraday, we are still watching those ranges and we are still not breaking out of them, so we will respect them. Moving on to the sterling, there we are in what I would say a 126, 127 range, in between a few levels, 126.30, 40, 126.80. This is the tightest one. Um, we're in the middle of it. I'm very tiny bit long sterling, but really it's not going to impact my account too much right now. I'm in a bit of a um, wait and see attitude, but I would use any dips that we or drops that we see in based on if it would be coming to us based on the month end. I would be interested in perhaps adding some to long sterling positions. Ideally, I would even like to see a drop below 126, getting closer to this 125.67 even. I'm not sure if we're going to get that. I think the last days data out of the US have been weak enough for the market not really wanting to trade much more on the dollar buying side. I I really think the opposite, that the dollar may be ready for a bit of a give back, but timing is going to be important, and that's why I still remain rather sidelined with very tiny positions only right now. On okay, Derish and Mike, I've seen what you've said, and I was just going to move over to what is happening on the Aussie and the Kiwi. They are losing some of their shine. Yesterday, I was long Aussie playing this 60 25 30 support 63 25 30 support. I was short Euro Aussie as well. I got quite comforted by Bessin's comments regarding their partnership with Australia. Until then, I noticed that he was at the Australian embassy and that perhaps it was just because of that that he was talking nicely to the Australians. But anyway, the move lasted for a number of hours into the early hours of today, and now we are seeing this this move. Weekend, the support is actually giving way. It's losing some of its shine, and I went out of the Aussie positions, grabbed a few pips here and there, and just in a wait and see attitude. I have not given it up, but we have to really respect what the market is doing and what the price action is. It is not looking great. Okay, so we had this support, we had the break, we're coming down, we hung around there for a while and it's going back below. I don't think that's great. Okay, so I wouldn't be surprised that we get a move back down to 62.90. Why not 62 um 62.70 around there? That is all very possible. um yeah, really. But and until really we start to break, okay, 62.10 for me is a bit too far away, but until we really start to break below 62 and a half, this could still be a move that will go higher later, but we will need to see what's happening over the next, and I would say the next couple of days into month end or so. Monitor what's going on. But it definitely lost some of its shine right now, the Aussie here, okay? We need to get back for a starter above 63.40. It's very, very close. But I would say more interesting would be if we get back above 63.60, 63.70. And then we can have a look back at this 63.95.15, which is, to me, gateway for really higher levels. But in line with most of the dollar pairs, we are not getting those breaks yet, okay? We are not getting the medium to longer term breaks yet, okay? We are still hanging around here, and so it's still undecisive, and we are still trading shorter term stuff. Kiwi, similar thing. We're broken back below this trend line. And it's also not looking particularly sexy right now. We are on the 57, 56.95 also level here, and again there too, in line with what's happening on the Aussie, it's lost a lot of its vitamins. This fruit. And I wouldn't be surprised if we get a bit of a move back down into the mid 56s, high 56s here. It's all very possible. We are going to need a fresh impetus for those commodity currencies to get going again. It all looks a bit fragile to me, right? And that's where we are right now. We're going to need fresh drivers in most of those things. Um, uh, let's move over to the yen. Okay, the dollar yen is trading inside this downwards channel, downsloping channel. We did hold the prior lows, which is interesting in this 148.60 70 area. That is interesting for now. It does bounce. Okay, it's all. Yesterday, I was looking at the S&P, and then I was looking at the yen, and it wasn't near perfect overlay. So whether you trade it on the back of the tailwinds that we see in Japan, which are still there for the time being, that is the overarching theme. I think the tailwinds for Japan are still there. But then you look at it in some of those intraday moves, the correlation algos are firmly plugged in. And especially on the dollar yen, it's been moving around either with the dollar the dollar yields which have been slipping, so that explains the dollar yen down move. But then it's also been trading with the S&P, and especially yesterday it was really an S&P play when the S&P was dumping and the yields were slipping. The dollar yen really did its low, and then the S&P started to jump, and the dollar yen recovered somewhat too. We had a retest overnight, and then on the Japanese data and Japanese tailwinds, but then again we jumped from exactly that same level, and we are now trading comfortably, not in the bigger picture, but in the short-term picture, comfortably back above those lows. Okay, and that is something that we need to watch out for. Now, Deresh, the bigger picture is still unchanged. Okay, for me, the big support zone here is 155.5, 156. But we if you look at the bigger picture, then we are not running too far away from that zone again. Let's not forget that the yen is a volatile currency, so we are having to allow for swings which can be like 1%, 1.5% on a day. It is possible, okay, but the bigger picture is still negative for me, at least. We are not getting back to 157.90, 158.40, which I was hoping for, to get a look back at this prior low, this prior spike high. I was looking for a move like this to perhaps lean in it, or a bit higher to build a bit of a short-term position, a short position, sorry. But then on the intraday, it's perhaps more interesting because over the past, since the start of the week, really, every time we bounce back to 157, 157 and a quarter, we're already running into trouble. Now we're trading back at around 157. Again, I repeat, I mean, euro yen, don't look for 15, 20 pips moves, okay? That thing moves 40, 50 pips at a time. It's not something where you play for really ticks and stuff. It is really a bigger mover, but we have to note that every time we get back up to that level, we are already finding sellers, okay? It is going to depend likely on what's happening in the S&P perhaps today. So keep an eye on that one. But just know, and again, I mean, month-end models have been random of late, or have been front ran of late, as we saw last month. Last month, the month-end models were correct until the day before, the last day of the month. So, and then we reversed a bit on the last day against the what the models were calling for. So that means that the market is pre-hedging. That even the asset managers, they now use more than just one session to do the month-end flows. So those month-end flows, they come in several legs instead of one go on the last day of the month. But we have to note here, to come back to the euro yen, that we are already finding offers in the 157 and a quarter zone, okay? So that is your intraday level to watch. If we get up there again, which it seems that we are going to get another try, we may again find those sellers. Just levels wise, not flow wise, I think there is a possibility for this to go a little bit higher, but know that it's one of the calls of month end that we should find euro yen sellers. So this makes sense that we see those sellers on rallies. Okay, and there is. Um, Moving over to one of the big movers yesterday once more. And I also put in this cloud here because we did on this move earlier in February, we came quite close to the bottom of the cloud. We are still inside, and now we are moving back towards the top end of the cloud. Okay, so this is for people who are watching those things. We are also turning around, and now we're actually breaking above the 55 DMA, which today comes in at 143.30. So that still shows us that the Canadian dollar is very much under the cush, and that for several reasons. Trump calling for the tariffs to be put in place. Navarro and I think somebody else was on trying to hammer the Canadians as well, surrounding that Five Eyes military coalition, or yeah, joint venture between with Canada in the mix, um, calling for them to be kicked out as well. Um, Canada is very much on the coast still, and we are seemingly on our way to the next zone of resistance. 143.70, 143.95, or call it 144, is going to be your next level of resistance. And look, this is after the big spike. The last couple of highs have been in this area, 143.65, 143.80. So this is a relatively important zone we are heading towards, okay? So watch this for further development. Watch, of course, the future comments on tariffs on this Five Eyes thing. It could it could decide upon the direction of the Canadian dollar. And also, as I said, it has not been helped by what's happened in gold. Um, we finally saw a break here. I'm going to go on a bit shorter time frame. We finally saw a break here of that little support line that we had. Seven call give and take 69.80, 70 was the level, and we finally are giving way. I think this thing, as I've already been discussing on mainly on face shows, it is not looking good to me still. Okay, I need to clean my charts up a little bit, but I just want you to look at that bigger picture. 2022, when the Ukrainian war started, we had this spike. Then we had OPEC, whatever, other spikes, other war spikes, other tension spikes, and every spike has been lower. Okay, we had like one here that moved higher, but if you look at the bigger picture, they getting gradually lower all those spikes. So this is really wasn't, I think, to me, an accident waiting to happen, and I wouldn't be surprised if we get back down at some stage into the 65, 66 zone for a look, see what's happening there. Um, Trump was saying that they are going to replenish the SPR. I don't know what levels those people will be looking at, but last year or so, there were always talks when it was trading in the 65, 63 zone that SPR was looking to replenish. Just bear in mind what the SPR is doing is not always market directional, okay? Because they are not going in the market with an amount of barrels that is going to stop a global market move, okay? So, but just note that they have been there regularly in the oil market. Alrighty, oil. No, not oil. Gold. Finally. Finally. I was waiting for this move to happen over finally get a little bit of a washout. I secretly hope for 28, 50, 60. It is still possible, but we are now finally giving up some of this extreme bullishness in gold. We did a $60 setback from the highs. We came close but no cigar to a bit of support around here, low 2880s. But as I said, I'd love to see a move down here and then see if there is a case for getting back in. So that would mean the shorter term trend line break, okay, from the start of 2025. I'd love to see a bit of a washout here, bringing us back to 28.50, 60, or even in the 28.30s, and there I would get interested again. There was a good call from one of our traders in our chat room yesterday regarding gold, that the washout came as the equity markets were dumping a bit, and it is possible that some of the gold longs, the speculative gold longs, I'm not talking about central banks, etc., but the speculative gold longs use some of the profits in gold to hedge against the drops in their long portfolios on the equity market. It's something to ponder. It can be part of flows indeed. Okay. But again, to me, I'm still on the sideline. I'm still thinking that a bit of a deeper setback is possible. But globally speaking, I have not given up on my long view. But this is perhaps a time to be a bit cautious on the gold long trade. Okay, so that for gold, silver as well gave back. We're back through that 32, 30, 50. We're also, but this was a fragile one. I think I'm going to, perhaps I'm going to have to change this one to a more reasonable. But no, it's not for my liking. Silver came back to a bit of support after having broken successively through this 32, 30, 50 zone that I've always been watching. Also 3180 give way. We are trading around here. We came close to this support here, which is 31 and a quarter. As we know from phase dailies looking for much lower levels to re-enter. I don't know. I will have to see because setbacks okay, but and then as we don't know yet exactly what's going to happen, but a more positive outlook on stuff like wars or geopolitics may see support in silver coming a little bit earlier. As you know, I'm always saying like for silver to outperform gold, we need a better global picture. It may just be that we are going towards a better global picture. Whether it's a psychological, whether we agree psychologically with it or not, and as we have said yesterday as well with Ryan, we have to look at the world through trader and money manager eyes, and whether we psychologically and, um, yeah, agree with everything that's going on is a completely different subject than what money is doing, okay, and what the flows are. And again, if the market judges that we are in a more positive environment in globally, still to be seen, but then something like silver is probably going to outperform gold, okay. And then lastly, no, I'm actually going to show you two more things. Lastly, S&P. S&P broke below 59, 45.50, came very close to our 2025 range, 61.8 here, and bounced from it. Okay, so that did. Some people are looking at it slightly higher, but for me it comes in around 59.10. This is about the low we have seen yesterday, and one, two, third low there, okay? And we're sharply bouncing from there back above 59, 45, 50. So this is again now your support, but this is now shaping up as being a bigger support on setbacks in the S&P, okay? So watch very closely if we get a return or if we get a revisit there. Potentially, I'm not going to say it's really going to happen, but potentially, who knows, over month and rebalancings also that we're going to have another look down there and we hold again. Beware of the next move. Okay, it could be that we jump again here. And last one, Swissy. Sorry, as I showed, I think that Euro Swiss was not looking too great. So that is usually testifying of a bit of strength in the Swiss franc. Also there, we had this January move in the dollar Swiss. Okay, a bit of a pause here. Then we had a bit of a setback, and then we started to move higher again in dollar Swiss. We just nearly tagged the 61.8, and it's also levels that have been traded on the way up. Okay, so 61.8, 89.10 on the dollar Swiss. This is something interesting to keep an eye on. Give and take, I would say 15, 20 pips as well, always. If it would break, then we come back into this congestion zone, but it has not broken. So we do respect that level. Okay. Intermediate levels here, 89.65. Where are we right now? We're trading around 89 and a half, so not too far away from there. But I would say that really the zone here to get back higher is the start of it would be seen anywhere between 90.05 and 90.20. Okay, that is now my relatively big resistance zone in the short term on the dollar Swiss. And with that, ladies and gentlemen, I'm going to call it a show for today, and wishing you all safe trading for the rest of the day. Bear in mind, there's a couple of things going on, value data end of month, so don't be surprised if anything comes out of that over the later London fixing later this afternoon. Thank you all, and we talk to each other again tomorrow.